Hello and welcome to Investing in REITs, where we examine the growing role of REITs within India's evolving investment landscape. In this episode, we spotlight REITs as an investment asset class, the yield, stability, and portfolio role as well. Over the last few years, REITs have emerged as an increasingly important bridge between traditional real estate ownership and modern financial investing, offering investors access to institutional-grade commercial assets through a transparent, regulated, and listed structure. For many investors, REITs occupy a unique position within the portfolio spectrum, combining the elements of real estate, equities, and income-generating instruments. At a time when markets are navigating volatility, interest rate cycles as well, and we are talking about shifting allocation strategies, the appeal of stable cash flows, yield visibility, and professionally managed assets has become even more relevant. To discuss this and a lot more, we are joined by Abhishek Agrawal, the CFO of Embassy REIT. We also have with us in the studios Gaurav Kumar, the MD Capital Markets India at CBRE. How are institutions looking at this particular asset class? What is the activity that you've seen? A lot of tax changes, a lot of classification changes that we've seen.
I think from an institutional perspective, it's a great exit. And if you go back to the genesis of REITs, especially in the context of office spaces, even when it started in the US, it was basically to provide investors access to commercial real estate without exposing them to the risks of commercial real estate, right? So you get your yield in. It's very difficult to buy a shop or a floor and then manage it, manage the tenancies, manage the asset itself. Straight away, it provides a great avenue for investors to participate into office in a very, very transparent manner. To institutions, it's a great liquidity event because what we are going through now is a stage 2 of institutional ownership. Stage 1 was when private equity came in, which were basically private investors or sovereign funds or pension funds, right? But when they built out these large positions in office portfolios, they needed an exit at some point in time. So it gave them that exit. At the same time, it gave retail investors a way to participate. So it's worked out beautifully. Institutions absolutely love it, but not for the same reasons as a retail investor would.
It is different for both the classes of investors. CBREs, you're sitting at the center of deal flow. You've seen a lot of changes that has come by in the REIT process or REIT regulations as well. What are you seeing in terms of capital deployment trends? Are investors prioritizing this as a core? Is it a satellite portfolio? Are they looking at more yield-generating assets when it comes to their investment priorities now?
Investors have always loved core in India. And, to give you a sense of scale, when Abhishek's REIT first listed, 25 million square feet was the size of the REIT industry then. Today, we are at 175 million square feet. So today, REITs own almost 175 million square feet, but this is not the only number, right? In total, institutional ownership of commercial real estate is 300 million square feet out of maybe a billion square feet. We're almost close to the billion square feet mark. So our office industry has scale, which was never there before. Market cap in 2019 was, let's say, 270 billion INR. Today, it's 2 trillion INR. That's how the scale has increased. So institutional investors have always liked core to be their first avenue of coming into India. It's easy. You don't have to go through approval risk, construction risk, reason risk, but also you're on a moderate return path, which they're okay with. So from their perspective, it's great to come in, build out office portfolios, buy office portfolios, list them. Tomorrow, you may have the concept of private REITs. You don't always need to have listed REITs. But coming in, going out, great. And so many successful case studies of people having made money. Foreign investors who've made money investing into core office portfolios. We have so many success stories now. And that's what's really attracting the rest of the world to come in.
And we're seeing a lot of transaction, right? We saw it with Prestige selling it to Blackstone, and there's so much interest coming by in REITs. Another follow-up to that, because considering the environment that we are in, when FIIs are pulling out money from equity markets, is this something that we could see in the commercial real estate market, which has seen so much trust coming in from FIIs? Are we seeing that?
So 2 very interesting things going on. One, if you ask Abhishek, his profile of shareholders or for all the other REITs, domestic mutual funds are playing a very, very big part. It's not only FIIs. And the second is even private wealth going into domestic core office funds, which has nothing to do with the foreign world, right? Because with the dollar always a little volatile, it's a lot easier for domestic wealth getting mobilized into Indian real estate. And I don't think they are being talked about enough. There is so much wealth out there that is going in an institutional form, both through the listed route, which is REITs, and through private funds. So it's not just the FIIs. The FIIs is, of course, a whole new category of investors that Indian office owners have been able to discover through REITs by maintaining control over their portfolio. So Indian entrepreneurs never wanted to easily let go of their core office assets because it's difficult to build, right? It's difficult to get land, build and lease. So the only way you can control ownership is through the listed route, get a new category of investor. Plus, there is also the whole sponsor-manager dynamic, right? So you can continue to manage your assets, earn the management fee as well. It's actually a win-win-win.
Okay, so just to follow up again, because it's a very interesting lens to look at it from, right? When we talk about private REITs, we don't have any in India, is my understanding. That's correct, right? So how would it work going forward? Do you think for anybody to participate into REITs, it has to be the listed way? Because we do have unlisted shareholding in shares, but would it work for REITs as well for an investor? Because we do get that question. What if we don't want to participate into REITs via the listed way? Do we have options?
As things stand today, no, but there are many private players who are seriously considering it. But, you know, then the ticket sizes will be higher because they don't have the ability to manage thousands or hundreds of thousands of retail investors, right? So that will be more for the ultra HNI category. But for retail investors, there is no better way to participate than going in for a REIT. Because even from a returns perspective, if you see the last 4 or 5 years, they've given very much equity-like returns. And all your, like he explained, all your dividend is very, very tax efficient as opposed to investing money into a debt instrument. So far, it's been a no-brainer. It's worked very well.
You know, we've been talking a lot about how this trend is improving in India, more listed REITs coming by. 2019 was the first REIT. We are in 2026 with 6 REITs now, which are listed on the exchanges. Gaurav, what is India looking like in comparison to global REIT market? Do you think we need more depth? And to do that, do you think we need more regulation or more ease of compliance to come by in order to do that?
I think we are very good from a regulation perspective. SEBI has done a great job in my personal view. You can expect to see at least 4 or 5 new REITs in the next few years. Like with everything else, our penetration is at a lower level. But having said that, you know, if you have 175 million square feet out of 1 billion square feet already under REITs, it's not bad at all. It's almost 20%, right? There are 2 new big office players who are considering a REIT. There is going to be a logistics REIT very, very quickly, and maybe more logistics REITs as time come along. So we are not imbalanced in any manner at all. And these REITs are also growing through acquisitions, right? So the scale of these REITs is not just organic growth, right? A lot of them are acquiring assets, some of them their own sponsor assets, but now for the first time we are seeing REITs do third-party acquisitions, right? One of the dynamics of the trends was in the last 4 or 5 years that most REITs were buying assets that were developed by their own sponsors, but that's completely changed. We've got 3 or 4 strong examples of these REITs now doing independent third-party acquisitions. The other very important thing for their balance sheet is that their access to debt at a REIT level is a lot cheaper than what even a very good AAA rated Indian real estate balance sheet would be able to do. And your avenues of debt open up. I think from a regulation perspective, RBI is getting more and more liberal because they understand that these REITs are very, very professionally run. No one wants to be on the wrong side of SEBI regulations. You know, at the private level, you can, you know, there's still room for maneuvering. So I think you will see more REITs coming. You will see more sectoral REITs coming. You know, you might maybe see another retail REIT coming, another logistics REIT coming. So I think there's plenty of growth, and, you know, our fundamentals are so great. Just in the first quarter this year, we've already done 20 million square feet of space. Despite all the talk about what's going to happen to office space, the RFP pipeline for this year looks great. In fact, for the next 24 months, looks very, very robust. Plus GCCs, who are very, very strong demand drivers for office space. And, you know, they're also less prone to fluctuations, given what's happening to the rest of the world from a tech perspective. The more it's not great for maybe Indian IT companies, but as far as foreign companies setting up their own captive GCCs, we're seeing action outside the tech space as well. Everyone's only spoken about tech, but there is so much happening outside tech, whether it's in pharma, whether it's in fashion, and all of those GCCs will come in as well.
I know, and REITs are a lot about commercial, but there are other layers to it.
Yes.
And as you said, there are other sectors, just not technology, which will contribute to the growth that we are talking about. And GCC is a big, big part of that growth story that we are looking at. Very interesting, a lot more questions, but this has been a great primer for investors on in order to understand it from a macro perspective, what are big investors looking at as well, and from a retail perspective as well, what it really means, what kind of cash flows you can expect, and especially the kind of taxes that you have to pay as well. Abhishek and Gaurav, thank you so much for joining us today and sharing your insights on the evolving role of REITs. It's a very interesting topic. India is making strides here, and we have to see whether that continues or not. But as you say, we continue to do really well. Sectoral REITs are coming up. Thank you so much for explaining all of it to us, and thank you to viewers for tuning in as well. With that, it's a wrap on this edition, but stay tuned to CNBC-TV18 for more news and updates.